Hey Mike here, I want to show you something interesting today. This is TC2000, which is the software I use to analyze the stock market and find stocks to buy and so forth. But one of the things it does is it breaks the stock market up into 239 sectors. And while most people pretty much obsess over what's the NASDAQ doing today or what's the Dow doing today, is it going to go up, is it going to go down, is it going to do this or that, it's actually more useful to see what the individual sectors themselves are doing. And what I want to show you is the performance of these sectors year to date, and which sectors are leading the market and which sectors are lagging the market. The number one performing sector, which is up 47%, are medical practitioners. These are small chains of medical service companies. It's kind of a very tiny and obscure sector in the stock market. It's only a few stocks in it. But after that, the top performing sector are gold stocks, metals and mining, which of course is where I have moved my money to early last week, because I believe they're breaking out into a new bull market. The sector closed above its 200-day moving average. It may pause here. I don't know what it's going to do day by day, but I think the upward trend is now up. In fact, I think we're in a new bull market, but I just want to show you how it's showing up now as being really, when it comes to a big sector, the top performing sector in the entire stock market so far year to date. And of course it's being completely ignored on CNBC. Jim Cramer wants to talk about Facebook and Yelp, while this is the sector that's really in a new bull market. In silver is fourth on the list, along with the gold stocks. Now let me show you the worst performing sectors, because this is, well, actually I want to make one point. When you break the market up in 239 sectors, what you'll find is that as of the close on Friday, 108 of the sectors, roughly half of them, have losses for the year. That's not good. And the market averages have bounced back up near their highs. And most of the sectors are underwater. That's the sort of thing you start to see in a stage 3 topping market, which becomes a bear market eventually. That doesn't mean today we're in a bear market. I'm not quite sure, to tell you the truth. But it's a troubling sign. It means that leadership in the stock market is narrowing. Let's try to see where it is in a second. But new leadership is emerging in the mining stocks and commodities. So to me, that's where new money should be put to work. And in fact, I sold to move money there. But let's look at the worst sectors. Out of curiosity, what are they? Electronic stores, toys and games is pretty much toys, home furnishing stores, dairy products. Well, that one actually doesn't look too bad. It looks like it's trying to form a bottom. Specialty retail, sporting goods stores, gaming activities, it's like casinos, office supplies. Again, these are the worst. Wireless companies. And what you notice is the bottom worst performing sectors all have to do with retail and consumer spending. So if we look at the big cap Walmart, it's below its 200-day moving average. Target, it looks miserable. What about Sears? How's Sears look? Not too good either. So it's the consumer stocks that are looking very bad. Well, out of curiosity, what does the NASDAQ, what's the leadership of the NASDAQ 100 right now? Just out of curiosity. Some Green Mountain Coffee Store, Tesla, which has become a favorite, mentioned almost all the time now on TV, and actually gold stock, which happens to be in the NASDAQ 100, Akamai, Facebook, Netflix. So really, essentially, the leadership of the NASDAQ has shifted to Tesla, a gold mining stock, Facebook, and Netflix. And what bothers me about that is Tesla, Facebook, and Netflix have extremely high valuations. It's really, I think they're speculative bubbles. The worst performing stocks, Mattel, again a consumer stock, VIP, a Russian telecom stock, Staples, Bed Bath & Beyond, Sears. Amazon is one of the worst performing stocks. This is year to date, what I'm speaking of. So interestingly enough, the worst performing stocks in the NASDAQ 100 are consumer stocks. Just as my TC2000 broke the market up into the sectors, it turned out that that matches, and the top performing thing is a gold stock in the NASDAQ 100 and a mix of extremely speculative technology stocks. So what's happening in the market, to sum up for you, is forget about what the market averages are doing, but when we look at what's happening inside the stock market, new leadership is emerging in gold, in metals, and mining, which I think is in a new bull market, and leadership is narrowing to speculative big cap tech stocks, to a dozen or so of them, and a lot of sectors are in the red for the year to date, even though the market has bounced back up. And consumer stocks as a whole are essentially, I believe, right now in bear markets. And what I mean by that, if we just pull up Staples, if a bear market in my book occurs when the 200-day moving average acts as resistance and begins to curl down, that's a stage 4 bear market. So you can expect those moving averages to act as resistance. New bull markets occur though when those moving averages flatten out. That's a stage 1 base. Then you break above them, and now they should act as support. As gold, GOLD, that stock goes up, and other mining stocks too. So all this confirms what I have been doing with my money last week in pounding the table on a new metals and mining bull market, which I believe will last a couple years, and I'm going to do my best to help you invest in those sectors. And we're seeing changes in the broad market. We're seeing some sectors fall into new bear markets, and leadership as a whole narrow. And I think that will be the continuing story when it comes to the overall stock market over the coming months. So I think this is some interesting information to give you an idea of what is really happening in the market, and to go beyond what you typically see on TV, which is essentially, are we going up, are we going down, and in this frantic type of manic trading activity, and essentially worrying, when you really know what is going on. You can make changes when they need to be made, and when something really meaningful is happening, and move your money into what sectors and markets and stocks provide the best opportunity going forward from a risk to reward viewpoint. So that's my update for today, and we'll be keeping in touch.